Oh, thank you very much. Thanks for having me here. Indeed, I mean, the Cyprus economy is demonstrating remarkable resilience. I mean, growth rate today is something like 3%. Unemployment is at historically low levels. Public finances, again, we are recording fiscal surpluses, budget surpluses for numerous years now, and as a result, debt to GDP has reached it's very near the Maastricht criterion, for those who remember Maastricht. And the inflation rate has come down to almost 0%. So indeed, the Cypriot economy is performing quite well. I think there are three important elements to it. A is the fact that the economy itself is being diversified, so new sectors are emerging and their contribution to GDP is increasing, technology, professional services, and others. The buffer that I discussed earlier in reference to the to the budget surplus, but also the banking sector is characterized by very strong capital and liquidity ratios, among the highest in the Eurozone. Nevertheless, Cyprus is an open economy, so it's vulnerable to external shocks. Although there is heightened uncertainty, primarily because of the geopolitical uncertainty, trade tensions, and other factors in reference to technology and other developments in the financial sector. The economy needs to focus and remain vigilant. And as you said, the European economy, even though the picture is mixed, but the European economy is still exhibiting resilience. Growth rate is around 1%, and is expected to continue over the medium term. But 1% is low. So I think it is evident that the Eurozone and European Union in general needs to ascertain itself and needs to gain more, needs to become more competitive. There have been many studies, I'm referring to the Draghi report, the other reports and others, that make recommendations as to how this can be achieved. I will not go over this because I think by now people are quite familiar with this strategy. It's a matter of pursuing it. So things like banking union, enhancing the single market really. So banking union, completion of the banking union, creation of a capital markets union, the savings and investment initiative, and there are quite a lot of other initiatives, such as the development of a proper venture capital market to enhance innovation and through startups. I think these are important initiatives, and the European Union needs to move on if it wants to play an international role.
And in particular, you mentioned the Capital Markets Union, which I think we've been discussing for sort of almost as long as I can remember, a proper Capital Markets Union. And many people keep pointing out that the American banks are larger, stronger than European banks. European banks, look, there are many more banks in Europe. They're not so good cross-border. We don't have full-size banks of the size of JP Morgan and others. Do you see progress towards a proper capital markets union coming now with more agreement from Germany and others to make progress in that direction? And can Cyprus, now about to assume the presidency of the Council of Ministers, help to push this forward?
I do see progress. I do see progress in the European Commission. I can also vouch for the ECB. I mean, it is a subject matter which is continuously on our agenda. So the will is there. and there is also planning on behalf of the European Commission. A number of initiatives, such as the Savings and Investment Union, have been announced. Other initiatives, such as the setting up of a 28 regime. I mean, people perhaps don't know much about it, but the idea is that we set up an additional legal framework that would help, that would encompass European law, which at the end of the day would help the creation of the Capital Markets Union. I think this is a very strong initiative because fragmentation is a real issue in Europe, and we have 20 different legislations, therefore 27 different legislations. So it is important that we come up with initiatives that overcome this fragmentation with a view to enlarging the capital markets in Europe. Capital markets, I mean, the market cap of the EU is 10% of the global market cap, whereas in the US is 50%.
Yes.
So we do need a stronger capital market, but also, as you also mentioned, we do need a stronger banking sector. We do need bigger banks. We do encourage mergers and acquisitions and consolidation in general, so that our banking sector becomes more competitive.
And do you have any worries about the general level of the markets? I mean, it is notable this year, stock markets everywhere seem to have risen very high. I think the next session we're going to discuss AI and the amount of money being spent by AI companies and the price of certain companies involved in AI very, very high. And at a time of low growth and in some countries, but not in Cyprus, very high public debts. Should we be worried about the high level of the markets?
It's true. Valuations are quite rich, especially in the US. To some extent, this is justified by the technology, by the evolution of the technology. So this is driven by the big tech and by recent developments in AI. So valuations may be justified. On the other hand, when you look at valuations historically, they're quite high. I mean, if you take there's a very easy, I quite like it, the Warren Buffett index, which is market cap divided by GDP. I mean, in 2007, it was 100% or so. These days, it's 225%. So this is an indication that market prices are quite high. Also, the PE ratio, I mean, and again, this is useful in comparing Europe with the US. I think the S&P 500 PE is 26,
yes,
whereas Eurostoxx is 17. So, and historically, the US is exhibiting higher PE ratios. Of course, as you said, yes, I mean, there is a high level of uncertainty, and therefore one could question the elevated stock market prices. One reason may be that markets tend to look through what they don't understand, what they cannot price. So it's very difficult to price geopolitical risk, to price cyber risk, even trade tensions. It may be easy to assess the impact of a specific tariff on an economy, but it's not easy to assess whether a tariff will be imposed or not, or whether it will change, because things keep changing. There are many other uncertainties as well. Climate risk is another example. And I think the markets have not matured to the level that they can actually assess and price these risks. So yes, I do think that there is a risk that at some point there will be a market correction. The question is whether this correction will be smooth
Or large.
or large or sudden.
And do you think other countries are doing, particularly in Europe, but also I think of the United States, are doing enough to reduce the level of their public debts?
I think they should do more. I mean, in the European Union, the debt to GDP, public debt to GDP is 88%. It's supposed to be less than 60%. However, there is, we do have this fiscal, this medium-term goal, this agreement among within the European Union that aims to reduce debt over time. I think the U.S., again, I mean, I think it's, debt to GDP is 125%,
yes.
Too high. This is a risk. So I think there are risks on both sides of the Atlantic. To some extent, of course, these elevated, these sort of budget deficits help with the growth of the economy, especially in the defense sector. But this will take time. So, I mean, the positive impact will take time. So in the meantime, one needs to find a way to properly manage the evolution of the public finances.
Okay. I'm looking to see if anybody wants to ask a question, but I have one more question if I don't see anybody, which is helpful because we don't have very much time and we are overrunning. My last question to you, Mr. Governor, was going to be about progress towards digital central bank currencies in Europe, which has been something we've talked about a lot for some years now. And it is under discussion. China is doing it. Other countries are doing it. The United States, as I understand it, has said they will not create a central bank digital currency. But in Europe, there seems to be still some discussion of doing this. Do you think this will continue, or do you think it will happen one day?
It's not a mere discussion. There's a plan, and the plan is being pursued and it's timely. So yeah, I do think that digital euro is a very important project. I do think that we need a safe asset, a central bank currency in the digital would be in the form of a digital euro. So this is basically the same currency, the same element as physical cash, only it will be in digital format. Last Wednesday, the Governing Council of the ECB approved the entering into the second phase of preparations, which means that this entails the operating part of the creation of the digital euro. So it's all about systems and the piloting and the branding and so on. So we do expect that this phase will continue as planned. Hopefully the legislative part will be over by the end of the Danish presidency, but if not, then some elements will be undertaken by the Cypriot presidency. And we do expect that during the Cypriot presidency, we will be entering into the trilogues. So these are the informal negotiations between the European Parliament, the Council, and the European Commission. So this is where we stand at present. As you said, the US is not pursuing this route. The US is going for a digital currency in the private sector through crypto assets, stable coins, and other related assets. This is the era of digitization, so one would expect that I think that this will continue both in the US and in Europe. But however, we do think that the market is moving very fast, so your crypto assets need to be appropriately regulated and supervised. We are, through MiCA, I mean, this is the market cryptocurrencies, crypto asset directive is looking to achieve this, but more is needed to make sure that we proceed with digital currencies in a prudent manner. As you know, this is a very volatile. I mean, crypto assets have been very volatile, so one needs to proceed with caution. In my mind, the creation of a digital euro would act as a basis for the creation of other safe currencies and eventually other types of safe assets such as bonds, in a digital format, but this is yet to come.
Okay. Well, thank you very much, Mr. Governor.
Thank you very
That was
much.
very interesting.
Thank you.